Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So, as we all know, today is the day we have been waiting for. It's the Fed day. So we will be expecting a lot of volatility, especially coming up from the Fed interest rate announcement. And at the same time, we'll be looking at the FOMC press conference. So, first of all, let's begin by looking at the economic calendar and see what else we're expecting. So, first thing in the morning that we got to see was the New Zealand dollar jobs data announcement. Employment change quarter over quarter was up 0.8%, and the unemployment rate went down by 3.4%. This was taken very positively from 1:45 a.m. And as you can see from the performance of the New Zealand dollar against the dollar since this morning, it's basically indicative of increased or continued strength in the New Zealand dollar. So here you can see the big spike arising from the news, but since a couple of hours ago, we have seen the market retracing, pulling back, but then from the last 2 hours, we are seeing signs of continuation. So there is a good chance we'll continue seeing this rally continue, which started late last week. We have already seen new heights being broken. We're already testing a key level around 0.62518. So going forward, if you look at the daily chart, you'll notice that this is almost like a 5-day streak moving higher. So potentially, if the dollar weakness continues today, then we could be seeing even higher prices with a new target around 0.631. So besides the news from the New Zealand dollar, there's more coming up. One, we will be looking at the ADP non-farm employment change, as well as the unemployment rate in the Eurozone. So these will be happening at midday for the Eurozone, and ADP non-farm payrolls at 3:15 p.m. So while the unemployment rate in the Eurozone might have some volatility, which we are not sure yet, we will be expecting volatility from the FOMC. So out of the announcement, even if there's a big surprise in the ADP, could be discounted as the market is more interested with what the Fed will decide. So as you can see with the interest rate decision, we are expecting a 25 basis point hike. And this would push US interest rates from 5% to 5.25%. So following the previous decisions, you can see in the last couple of meetings since March 2022, we have had consistent hikes, basically moving interest rates from very close to zero all the way up to 5%. And this is the fastest rate hike that the US has ever done. So in this expectation that the US would go for 5.25%, there's also more pressure coming in from the current crisis in the banking sector, especially after the collapse of the First Republic Bank over the weekend. So there's more pressure on the Fed to stop hiking interest rates. But then the Fed is an independent institution, and one of their biggest mandates is to ensure that there is stable prices in the US. So until inflation gets to the 2% target, then we follow the guide of the Fed Chair Jerome Powell, where he has insisted time and time over again that he will walk the path until inflation gets back to 2%. So from the current level of 5%, we'll be expecting another 25 basis point hike, and this is expected to be very strong upon the side of the dollar. So while on one hand, it's expected to strengthen the dollar, investors are also forward-looking. They know that these interest rate hikes might not continue indefinitely. From this point onwards, we will be looking at a flipping of the interest rates versus inflation. So for the better part of this cycle, where the Fed has been hiking interest rates, we have seen interest rates being consistently lower than the rate of inflation. However, from the last hike where the interest rates were put at 5%, then the inflation also dropped to 5% on the same month. So if the Fed goes for a 25 basis point hike and the next inflation data comes lower than that, then we'll be having higher interest rates than inflation rate. And in that case, it is a change fundamentally, and that is expected to achieve the target of 2%. So while the market is forward-looking, if the Fed goes for a 25 basis point hike, then there could be bets on the markets that the Fed will not go for another rate hike, and they might maintain 5.25%, looking towards pivoting or basically the next rate cut. So, well, on all these rate hikes, we were expecting the dollar to respond by being strong. In this one, we could be seeing the exact opposite. The Fed goes, yes, for a rate hike, but the market reacts in the opposite direction, expecting that there are no more rate hikes. So we can already see this happening from the yesterday's price action of the dollar. So if you look at the dollar index, you notice that it had been very strong, making some good rally for about 5 days. But then the sharp drop here is very indicative that the Fed could be stopping to hike interest rates, and we could be seeing some further weakness in the dollar, since we will not be seeing any other rate hikes going forward. However, this is heavily dependent on what will transpire during the FOMC press conference. So it's very important for any trader out there to follow the meeting closely, look at the commentary and the discussions by the Fed members as well as the Fed chair, and also how they interpret the situation of the banking crisis. So in this case, there could be bets that the dollar weakens and maybe a stock market rally. So from this morning, after the big sell-off yesterday, which we saw happening in US equity indices, that is the US 500, we also saw it happening in the Dow Jones. And also in the NASDAQ, there was a big sell-off. This morning, we are seeing some strength or some form of recovery happening. So we are seeing these moves being reversed. So we are not sure yet whether they will be reversed completely, but then this is pegged on what happens during the Fed meeting. So it's very important to prepare for this kind of volatility, since if there is any signs that the Fed pivots or stops hiking interest rates, then stocks could start recovering, and we could be seeing the dollar starting to weaken. So looking at the majors, we are seeing a good rally happening in pound USD, betting on the same. We are seeing a good rally happening in New Zealand USD, good rally happening in Euro USD, USD card in this case. There was a good rally, but didn't materialize well to the resistance we're expecting. This was at 1.36475. And also for USD yen, despite the yen being fundamentally weak, we are seeing the dollar losing to the yen. So the most surprising one was gold yesterday, having traded for 3 weeks in this kind of triangle. You can see the two trend lines here. There was a very strong bounce from 1978.47 all the way up to 2000, no signs of stopping, just cruised through that level, got to Labor Day's high of 2005, and even moved higher to 2015. So there is a good chance we'll be seeing another gold rally having broken out of this pattern. So potentially getting to 2031 and also 2048, depending on what transpires later today. So for UK oil, it was very interesting noticing that we had a very nice trend line that was being respected. And during the session yesterday, we managed to capture this area where there were signs of rejection. Our target was really small compared to what happened. So there was a big sell-off in Brent oil, dropping all the way to 74.36. And this seems to be a continuing theme for the day. So looking at the big swing, it's very important to note that we have already broken all the major support levels that we were expecting to at least see a bounce. So in this case, the only target that is in mind is the previous low that we saw on the 14th of March, and this is way around $70.1 per barrel. So it's pretty interesting to see what's happening here. And at the same time, we know that whenever a major level has been broken, it's always important to consider the possibility of a retest. So though we had a very small retest here, you can see the market breaking through $75.4 per barrel, retesting quickly and continuing to push lower. Then we can't price out the potential that the market would go back to the same level before making another commitment to make another leg downwards. So it's very important we follow the FOMC. I think every box today stops at the FOMC, and that might lead to the next set of rally or even selling in the market. So that's the focus for today. So I'm still checking to see if there's any questions so that I can respond. Hello, Heisenberg. Thank you, and welcome to the session. Hello, Apollo. This may sound off, but wondering the importance of trading used by FOMC. Market expects 25 basis points and fully priced markets now. In addition, the pulse for long and said by Jay Powell. I don't know what you mean, but seems a little bit hurried on your response. So the idea is, if the 25 basis points is already priced in, then we will be following the FOMC press conference for forward guidance. So we want to know when the Fed stops hiking interest rates. So from the last couple of meetings, they had mentioned that interest rates would peak between 5% and 5.25%. So if they actually go for the 25 basis points today, then the market will not be expecting any further rate hikes, which means going forward, the market will not be expecting higher yielding bonds, and bond yields might start going down, and we might start seeing recovery in bond prices. So in this case, we are expecting, if they mention anything to do with having achieved peak rates, then in that case, we might consider looking at a potential pivot, or basically the Fed keeping rates flat for some period. And that is the basis of the expectation that the market might react negatively to the news today. So what calculator do you use for position sizing on indices? I know most calculators that you find online for position sizing, they normally have currencies, gold, oil, but they don't have indices. So the best way to do your calculation is to use a demo account. It's the simplest way to calculate your position size. So just execute the potential position on a demo account, set your stop loss, and see if you're comfortable with that, and then iterate until you know what lot size to use when you go for that position on your live account. So it makes it very simple and direct. So thank you very much, guys. Thank you for your time, and I hope to see you on the next one. So kindly note that we have a new episode coming up on the Bullish Banter podcast. So you can check out on all our platforms, especially on YouTube, Spotify, Apple Podcast, as well as Google Podcasts.